Hello and good morning, ladies and gentlemen. You're with Martin Panef, Chief Account Executive Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook from GDMFX Europe. Starting with the North American markets, down the Nasdaq up 26 points for the industrial and 110 for the high-tech market. The Dixie Index is up slightly. ADP employment change 11,000 worse than expected. Non-farm productivity 0.5% better than expected, and factory orders month on month with a decline of 0.5%. The Federal Reserve's Beige book showed signs of weaknesses and strength in the US economy. On the side of optimism about the economy, several of the Fed's 12 districts reported increasing wage pressures caused by labor market tightening. Earlier reports this year have found only a smattering of wage gains, mainly in highly skilled jobs. Higher wage pressures could lead to a pickup in consumer spending, therefore more jobs and more demand. More general wage pressure could give the Fed enough confidence that the inflation is moving up towards its 2% mark. Today we're going to have a few reports from the North American markets: trade balance in the US, Markit Services PMI, Market PMI Composite, ISM non-manufacturing PMI as well, and tomorrow NFP Day, as well as the unemployment report in Canada. Moving along to the European markets, where the DAX and the CAC both did 70 points up yesterday. The European shares headed for a higher open today, tracking strong gains on Wall Street, with investors focusing on a meeting and the European Central Bank later in the day, and the US jobs data tomorrow, which will give them enough hints about the market's near-term direction. Today, ECB interest rate decision, the monetary policy statement, along with the annual press conference. We also have European Union, Germany, France, Italy, and Spain Markit Services PMI, along with the retail sales reports in the European zone. Tomorrow, gross domestic product reports for the European zone. UK markets, PMI construction didn't hit the forecasted, but still better than previous, even though it is the holiday season. No major events in the calendar for the sterling today, and also by the end of this week. The biggest mover yesterday was the pound euro, 60 points down, pressure from the sterling versus the euro. Asia Pacific markets, yesterday we had the foreign bond investment reports, which is showing capital inflow with a positive difference of 1.111 trillion yen. And also we had a foreign investment in Japan stocks, which was in decline from previous 461.9 billion to 630.3 billion in August 28. Australian retail sales unexpectedly fell in July, the first drop since May 2014. The data corresponds with a rise in the household savings rate and suggests little improvement in the economy at the start of the third quarter, after the GDP data slowed to 0.2% in the prior period. The currency touched a 6-year low on Wednesday after a report showed Australia's economy expanded last quarter at half of the pace forecasted. The Kiwi shed a part of the early gains and remains bid as the New Zealand benefited from the release of positive data. Basically, we had total building activity amounted to over $4 billion in the June quarter, up 8% on the same quarter last year, and the highest value ever recorded since the series began 50 years ago. Moreover, the Kiwi dollar pair remains lifted with returning risk sentiment after Chinese markets rebounded. Also, the global dairy trade report, this is the global dairy price report index, posted a sharp almost 11% gain yesterday. Moving on to the commodity sector, the S&P 500 index had a range of 41 points yesterday, around 1950 currently. Crude oil stocks change, basically the inventories rolled by 4.7 million barrels in the week ended August 28. After falling by several dollars per barrel in the morning session, crude futures rebounded in the afternoon trading following sharp declines in OPEC supply last month. In August, OPEC supply fell to 31.71 million barrels per day, down from a revised level of 31.88 in July, making its first monthly decline in 7 months. Also, the Venezuelan president, Mr. Maduro, signed a $5 billion loan from China to boost oil output and pledged to increase exports to his country's largest creditor. The WTI had $3.5 range yesterday at 46.15 now. Gold prices dipped in Asia this morning as investors await a key meeting in European policymakers and a critical U.S. employment data later this week for further indications on the direction of the global interest rates. Gold had a range of $10 yesterday, ended on a negative side, trading at $1,133 per troy ounce currently. This was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.